The difference between a 15 and 30-year mortgage is not just the term, it is potentially $150,000 in interest. Here is how to decide. In fact, a 15-year mortgage can save you a staggering $200,000 in interest payments over the life of the loan. This video is designed to help first-time home buyers understand the difference between a 30-year and 15-year mortgage. By the end of this video, you will learn how to choose between a 30-year and 15-year mortgage, the pros and cons of each mortgage type, how to calculate your mortgage interest savings, the impact of mortgage terms on your monthly payments, and tips for paying off your mortgage faster. What is a 30-year mortgage? A 30-year mortgage is a type of mortgage that has a term of 30 years. This means that you will have 30 years to pay off the loan, with monthly payments that are typically lower than those of a 15-year mortgage. However, because the term is longer, you will pay more in interest over the life of the loan. For example, if you borrow $200,000 at an interest rate of 4%, your monthly payment would be approximately $955 per month. Over 30 years, you would pay a total of $343,739, with $143,739 of that being interest. What is a 15-year mortgage? A 15-year mortgage is a type of mortgage that has a term of 15 years. This means that you will have 15 years to pay off the loan, with monthly payments that are typically higher than those of a 30-year mortgage. However, because the term is shorter, you will pay less in interest over the life of the loan. For example, if you borrow $200,000 at an interest rate of 4%, your monthly payment would be approximately $1,479 per month. Over 15 years, you would pay a total of $266,792, with $66,792 of that being interest. 15-year mortgage pros and cons. The pros of a 15-year mortgage include lower total interest paid over the life of the loan, building equity in your home faster, and paying off your mortgage sooner. However, the cons include higher monthly payments, which can be challenging for some borrowers to afford. For example, if you have a tight budget, a 15-year mortgage may not be the best option for you. 30-year mortgage pros and cons. The pros of a 30-year mortgage include lower monthly payments, which can be more affordable for some borrowers, and the ability to qualify for a larger loan amount. However, the cons include paying more in interest over the life of the loan, and taking longer to build equity in your home. For example, if you're looking to purchase a more expensive home, a 30-year mortgage may be a better option for you. Comparing mortgage payments. When comparing mortgage payments, it's essential to consider the total cost of the loan, including interest. For example, if you borrow $200,000 at an interest rate of 4% for 30 years, your monthly payment would be approximately $955 per month. However, if you borrow the same amount for 15 years, your monthly payment would be approximately $1,479 per month. While the monthly payment for the 15-year mortgage is higher, you will pay less in interest over the life of the loan. Which mortgage term is better? The 30-year versus 15-year mortgage, which is better for you, depends on your individual financial situation and goals. If you can afford the higher monthly payments and want to pay off your mortgage sooner, a 15-year mortgage may be the better option. However, if you need lower monthly payments and are willing to pay more in interest over the life of the loan, a 30-year mortgage may be the better option. It's essential to consider your budget, financial goals, and mortgage options before making a decision. Now that you've learned about the difference between a 30-year and 15-year mortgage, it's time to decide which option is best for you. Click the link in our description to download our free mortgage calculator and start comparing mortgage options today. Don't forget to subscribe to our channel for more first home buyer tips and advice.